Imagine this: a company that wants to change the way Americans buy and sell homes, a business that could disrupt the entire $2 trillion real estate market. And yet, in the middle of that potential, its stock is down over 4% today. That company is Opendoor, ticker symbol OPEN. And in this video, we're going to break down everything happening right now, from insider buying, short interest battles, hedge fund moves, options activity, technical levels, and yes, even the drama in the community that's shaping how investors see this stock. If you care about housing, disruption, and the future of real estate, you're going to want to stick with me for this entire breakdown. Now, before we dive in, hit that like button, because this is going to be one of the most complete deep dives into Opendoor that you'll find anywhere on YouTube. Let's get into it. Opendoor finished the day down about 4.6%, trading in the high $8. Intraday, it touched a low of around 8.88 cents and a high just under $10. Volume was softer than average, 138 million shares compared to an average of 356 million. That lighter trading activity signals hesitation in the market, and honestly, it matches what we're seeing across the board with growth stocks as investors wait on the Fed's next move. Retail sales came in stronger than expected, 0.6% versus 0.4%. Consumers are still spending. Why does that matter? Because housing activity is a consumer-driven business. If people are confident, if money is flowing, housing picks up. And with Opendoor's model of flipping homes and making the transaction digital, rate cuts combined with consumer strength could be rocket fuel. But right now, markets are nervous. There's uncertainty about whether Jerome Powell will actually deliver a cut, and if he doesn't, tomorrow could be wild. Now, here's something the bears can't ignore. A board director, Eric Wu, just bought 451,000 shares on September 11th at 665 cents. And no, this wasn't free stock handed out by the company, this was his own cash. Insiders almost never step up like that. Critics will say, well, he didn't buy at $9 or $10, so maybe he doesn't see value there. Fair, but let's be real. Directors rarely buy anything. The fact that he did tells us he sees upside. Is it the most aggressive insider buy in history? No, but compared to endless free stock awards, this actually matters. While insiders nibble, shorts are circling. Roughly 25% of the float is shorted. That's over 160 million shares. Just today, shorts added almost 6 million new positions. Add hedge fund selling, add algorithmic programs that pile on momentum, and you've got manufactured pressure weighing down the stock. Even in dark pools this morning, heavy selling came through, which is why the stock slipped even as pre-market looked positive. This is the classic tug of war. Retail and insiders buying dips versus algos and hedge funds pressing the price lower. The options market adds another layer. Calls totaled $36 million today versus $9 million in puts. But here's the kicker. Over 56% of options activity was bearish. The market is split. Bulls see upside to $10 or $11 near term. Bears are betting on a slide back to $7.50, $8. If you followed this stock for a while, you know it doesn't behave like a traditional real estate play. It's trading more like a momentum name sometimes, even like a meme stock. Wild moves up 10% one day, sharp drops the next. And speaking of meme-like behavior, let's talk about the social media drama. If you're on Twitter, you've seen Eric Jackson. He's been hyping Opendoor with wild targets, $82, even $500. Here's the problem. When you throw out numbers like that, serious investors tune out. Look at GameStop and Roaring Kitty. He never promised $500. He posted memes, data, and let the market do its thing. That credibility mattered. When Eric says $500, it actually hurts the stock's image more than it helps. And this whole thing with Drake, standing outside Drake's house hoping he buys a share, Wall Street doesn't care if Drake owns one stock of Opendoor. It's noise, not fundamentals. Personally, I think the community needs tough questions here. Why $500? Why Drake? What's the logic? Hopefully an interview with Amit happens soon to press him on it, because these questions matter for credibility. Opendoor is currently sitting around $9.20. Support is in the $8.57 to $9.02 zone. Resistance levels $9.31, $9.77, and $10.22. Traders are watching those closely. If you're swing trading, buying closer to support and trimming at resistance makes sense. If you're long-term, the best strategy is dollar cost averaging. This stock doesn't move in straight lines. It consolidates, builds support, and then makes sudden runs, sometimes 10% in a day. Right now, it's still above its 10-day moving average, which means momentum hasn't broken down. Honestly, I'd welcome some consolidation here. Stronger bases lead to stronger breakouts. Think back to the $4 range. It consolidated there, then powered higher. That's the kind of setup that creates sustainable moves. So, what's the big picture? Opendoor is not just a real estate stock. It's a disruptor trying to digitize the buying and selling of homes. If rates drop and housing activity rebounds, this could be a multi-year growth story. But the risks are clear. Heavy short interest, volatility, and hype-driven community drama all add layers of risk. You need conviction and patience to hold this one long term. For me, the strategy is simple. I'm cautiously bullish, I'll buy dips, but I'm not going all in. If the Fed cuts tomorrow, Opendoor could surge. If they don't, expect pain short term. Either way, opportunities will be there for disciplined investors. Now I want to hear from you. Are you buying Opendoor at these levels? Do you see insider buying as a bullish signal? And do you think $500 price targets are helpful or just noise? Drop your thoughts in the comments. I read every single one. If you got value from this breakdown, hit like, hit subscribe, and share this with someone watching the housing market closely. We'll keep following Opendoor, the Fed, and the real estate disruption story right here. Thanks for watching, and I'll see you in the next one. This video is for informational and educational purposes only. I'm not a financial advisor, and nothing in this video should be considered financial advice. Always do your own research and consult with a licensed professional before making any investment decisions. Investing in the stock market involves risk, including the risk of losing your money.